a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about gold mining ETFs. And gold mining ETFs have been in news over the past 2-3 days because Warren Buffett's Berkshire Hathaway acquired a $565 million stake in Barrick Gold, which is one of the largest gold miners in the world. Now, this move was a bit surprising because Buffett has said in the past that he doesn't like investing in gold because gold doesn't produce any income. But his acquisition sent shares of Barrick Gold soaring, the news regarding his acquisition, and other gold miners also benefited from that report. And they have been doing quite well this year because they are basically leverage plays on gold, and gold has done very well this year. It's up about 30%, mainly because of investors' search for safer assets and amid rising uncertainty for the global economy due to the coronavirus crisis, and record low interest rates also benefited gold because then the opportunity cost of owning gold goes down when interest rates are very low because gold does not produce any income. But talking about gold miners in general, they are leverage plays on gold, and they are generally much more volatile than gold. When gold prices go up, they surge. When gold prices go down, they fall a lot. And there was a report in the Wall Street Journal recently that the cost of mining gold has been going up over the past few years. That is because gold is one of the rarest metals in the earth crust, and much of the easier to get ore has already been extracted. So what is left is harder to find and more expensive to extract. So mining costs may go up in the future. That is something to keep in mind. But we may find newer sources of gold. Who knows about that? Maybe in the oceans or on asteroids, but that is probably a few years away. Anyway, let's take a look at some of the most popular gold mining ETFs that have done very well this year. So the first one that I'm highlighting is by VanEck. VanEck Vectors Gold Miners ETF, ticker symbol GDX. It's the first and largest gold mining ETF. It basically holds global companies that derive more than 50% of their revenues from gold mining. It has an expense ratio of 52 basis points and has over 17 billion in assets. Now, if you want to learn more about this ETF, you can go to the quote page on Zacks.com. I also did a podcast with the manager of this ETF, so you can listen to that podcast. You can read our research report, and then you can go to the external homepage, VanEck Vectors webpage for this ETF, and you can look at the holdings and other details. You will see that there is a lot of international exposure because not a lot of gold mining companies are US based. So 44% exposure to Canada, and then US about 18%, Australia, Brazil, South Africa. Now looking at the top holdings, Newmont, Barrick Gold, Franco-Nevada. It's a market cap weighted ETF, so these are the biggest global firms in the space. Now, the second one that I wanted to look at today is again by VanEck, but it invests in smaller companies. So it is called VanEck Vectors Junior Gold Miners ETF, ticker symbol GDX. JJ for juniors. So it is more volatile than gold and even more volatile than GDX, which invests in bigger companies because of its exposure to smaller companies. And in addition to gold, it also holds silver mining firms. So global companies deriving more than 50% of their revenues from gold or silver mining are held by this ETF. This also charges 53 basis points and has 6.4 billion in assets. Again, to take a look at this ETF, you can go to the quote page on Zacks.com. From there, the external home page. Again, VanEck vectors. Now this has even more global exposure than the bigger one. Canada, Australia, South Africa, these have a lot of small gold and silver mining firms because the gold and silver mining firms are based in these countries. And looking at the holdings, you will not recognize many of them. Kinross Gold, Gold Fields, Pan American is something which you might have heard of. Northern Star, Yamana Gold is popular, so these are among the top holdings in this ETF. Now, the third one I wanted to highlight is by iShares. It is iShares MSCI Global Gold minus ETF, ticker symbol, very interesting ring. It holds global companies that derive majority of revenues from gold mining. This is the cheapest in this space with 39 basis points expense ratio, slightly smaller than the other two, 548 million in assets. And again, to take a look, you can go to the quote page on Zacks.com. And from there, the external home page, iShares web page, you can read other details and look at top holdings. Now, this is also market cap weighted, but this is a bit more top heavy compared to GDX. Newmont, Barrick Gold, Wheaton, Kirkland Gold. These are the top holdings in this ETF, and this also has a lot of global exposure like the other two. Now, on the last slide, I have the comparative performance of these three ETFs versus gold and the S&P 500. Now, you will see that the iShares product has done best, but all of them are up between 45 to 50% year to date, whereas gold, as I mentioned earlier, is up about 30%, and the S&P 500 is up about 5% this year. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and I'll see you next week.